Are you trusting your finances to a tax strategist who won't even sign your returns? Don't fall for generic advice. Learn how to spot the real experts and protect your money. First, I want to start off talking about the difference between an EA or enrolled agent and a CPA or certified public accountant. There are certain tax strategists on the internet that are EAs and try to convince the general public that an EA is more educated or more suited to provide tax advice than a CPA. Now, here's the difference in education. An enrolled agent doesn't need a degree in accounting or tax or anything like that. All they have to do is take a test in front of the IRS, which allows them to practice in front of the IRS. So they are specifically trained with taxes, but they lack all the other background with accounting. They don't typically know GAAP or general accepted accounting principles. They don't have a general understanding of bookkeeping potentially. It's a much more accelerated way to sign, practice, and advise when it comes to taxes. A CPA, on the other hand, has a much more rounded experience, and if they're focusing on tax and practicing tax, then they probably have more testing and education in tax than an EA, even though they aren't specialized in their education. The CPA needs a bachelor degree and in most states 150 credits to receive their CPA. In addition to that, they have to take a lengthy 4-part exam. One of those exams is a long test on tax. In addition to that, they have to take audit and other general principles they would need to know as a well-rounded practitioner. CPAs also have additional standards to abide by with state societies and ethics. This is all in addition to the rules they have to follow put out by the IRS. So when you really break it down, if you have a CPA working in tax, they generally have a lot more education specific to tax than an EA, even though all they learned was tax. This doesn't mean every CPA does know tax because there are auditors, there's also internal bookkeepers, so they're not all focused on tax, but those that do focus on tax generally are going to have more education. This isn't to say all EAs are bad or cannot provide tax advice, but all else being equal, a CPA is more likely to be able to provide good tax advice. This leads me to the next thing, which is you should avoid tax strategists who don't actually sign your return. Because guess what? It's really easy to sit up in your ivory tower and say how good this strategy works. But when it actually gets into preparing the return and looking at the specifics and how it applies to a taxpayer, it may not work or it may just downright be wrong. I'll give you an example of this. I had a client a long time ago, and we actually worked with an outside attorney who actually was very good at what he did, but he wasn't signing the return. Well, the client consulted with this attorney, received some advice. Then when we went to prepare the return, we started actually looking at the forms, how it worked, and we know the result that the attorney had told us we should have, but when we got into it, the forms were giving a totally different outcome. This prompted us to look into the attorney's advice, double check it, and what we found that was wrong. So we go back to the attorney and say, hey, this is what we found. What do you think? Luckily, this was a good attorney and owned up to the mistake and we were able to correct it. But you don't have that a lot with tax strategists out there that are just good marketers, but not actually putting their money where their mouth is, so to speak. Talking about marketing, you want to avoid these tax strategies that are just basically blanket strategies that some are giving to all taxpayers saying, oh, this will work for you. For example, the Augusta rule, which talks about if you have a house and you rent it out to your business, then you can take a deduction on the business and not pick up the income on the rental side. But here's the reality. You have to set up a market rate for it. You can't just pay whatever you want to avoid taxes. You also have to have a good business reason for doing it. It doesn't make sense in a lot of cases for a lot of businesses, but when tax strategists are marketing, they say whatever sounds the greatest to attract the attention and try and sell them on the services or whatever it may be. but that doesn't necessarily mean you're going to benefit from it. Watch out for those that sell you things without asking about your goals for the business. Not all strategies are created equal or for everyone. You need someone that's advising you and asks you the right questions. I always like to say that whoever's advising you should probably be asking 5 questions for every one that you ask them. So if you ask them a question, then they should try and figure out, how do I get to the bottom of this? They want to give you the correct result. So they're not going to just answer with, oh, no, that doesn't work for you, or, oh, yeah, sure. Instead, it's a conversation and a back and forth to get to the correct result. Lastly, be aware of those strategies that sound really good on paper, but are actually just expensive and don't make sense for most people. So in other words, the juice just isn't worth the squeeze, because people will talk about all of these things, have this foreign entity set up over in whatever country and you'll pay no tax or reduced tax. Well, even if that is true, a lot of times the amount of work to do it correct and the cost to do it correct is much higher than it's worth for most people. And that's the same for many strategies. So you want to make sure that you're not just getting sold on this, oh, so-and-so pays 0 tax, and why are you paying so much? Maybe in order to do that, you have to either have more economies of scale, or you may have to change your business completely. One strategy that gets pushed out there a lot by these tax strategists, or in other words, marketing experts, is the short-term rental idea. So this basically is a strategy where instead of having long-term rentals, which are a lot of times if you have a full-time job, those deductions, if any, from depreciation are limited and you can't offset your W-2 income or other business income. A short-term rental strategy is a loophole in the tax code where if you have short-term rentals like an Airbnb, you can use those deductions against your regular income, even if you're not a real estate professional. And while that sounds great and it works for a lot of people, if you're not in the real estate industry, or if you don't want to invest in short-term rentals because maybe long-term rentals is better for you in your area or whatever your goals and life situation is, then that strategy is not going to work for you no matter how good it sounds. You would have to change your life and the way that you look at investments in order to implement that strategy. So it only works for some people. In summary, there are a lot of good tax strategists and there are a lot of bad ones, just like every profession. You probably run into it all the time, no matter what industry you're looking at. Maybe you have to go through 9 people that aren't as good to find the one. Well, tax advice is no different. So I hope that this has helped you figure out who the 9 are so that you can find the one that is going to help you.